When you see the big concerns out there for European leaders, from European investors, and from finance ministers, is it trade, trade, and trade?
Yeah, no, I of course understand that at this stage, and I would say, from a European perspective, remembering that European economies are particularly open, that is certainly a concern that I would share. It's as far as the concrete measures on steel and aluminum, they have been suspended for now vis-a-vis Europe. They are in themselves not quantitatively very large, the impact on Europe. But given the openness of Europe, clearly we are concerned about the risk of an escalation. And our policy advice, is we have a multilateral framework, we have the WTO, and we think that whatever concern and grievance there are need to be dealt with inside this multilateral framework, and that is critically important for growth going forward, not least in Europe, that one deals with the problem inside this framework.
The IMF has also said Europe should integrate further. Mm-hmm. How can Europe integrate further if we have pockets of populism, such as the Italian elections?
So, I think that the integration of Europe is critical for preserving stability going forward. Let me be more precise. What we have learned in the euro crisis is that unless we have a deepening of the integration, when we get these shocks, they cause unnecessary stability. So we will have shocks, we know that, and it's about dealing with future shocks. It's about having a common backstop for the resolution fund, developing deposit insurance, having a central fiscal capacity, simplifying the rural capital market union. Fundamentally, the issue that's holding them up are legitimate concerns in Europe about how to trade off risk sharing and risk reduction. Clearly, some countries are concerned about that they will just be burdened by legacy problems in part of Europe. So you need to have proposal that sort of bridges these concerns.
No one but you has been more in the trenches on this from the beginning of the financial crisis. The mystery I hear interview after interview after interview is why can't Europe, within these many debates, extend debt maturities? Take debt due 5 years out to 15 years. Take debt due 15 years out to 30 or 40 years. We used to do that. Why can't we do that now? Why can't we do that for the next crisis?
So, to be fair, Europe has already done a lot of that. And as a result of that, the burden, if we talk about Greece, the burden of interest payments on the Greek economy has come down dramatically, even though debt has actually gone up. Because Europe already has done a lot of this extension of maturities, extension of interest payment. So the discussion right now is how much is needed. We tend to have a bit more conservative outlook on Greece, on growth, on the ability to run high primary surpluses, and therefore we think that Greece needs a bit more help in terms of extension of maturities than our European partners think. But differences are actually narrowing, so that discussion is going on.
Are you worried about slowing growth in Greece? And are you worried about actually Greece turning ugly again?
So, it's important for me to clarify this. There have been a lot of discussion about these fiscal targets and whether Greece can reach the targets. I have no doubt that Greece can reach the target that it sets for itself in its discussion with European partners. What I have concern about is whether it can do it in a way that it can grow at the same time. So, much of the fiscal adjustment, which has been truly extraordinary in Greece, have been done by compressing capital spending, other spending that's essential for growth, to exceptionally low levels. And that's not sustainable. So that's what we're talking about. Not about how to reach certain targets, but about doing it in a growth-friendly manner.
Your watch is Europe. I know you don't want to speak about America and the uproar over the deficits and the debt in America, but the fact is, in Vito Gaspar's fiscal monitor, you see these single statistics, whatever ratio it is, that cause great concern in America. What would you say to our American viewers and listeners who say, look at that one data point, that's a bad data point, whatever it is now? How do you synthesize everything in to a constructive solution if you're just focused on one data point? Because in Europe, you didn't have that luxury.
So, I will not comment on U.S. fiscal policies. I have no expertise on it, and you know more about it than I do.
Maybe not.
I'm sure. But it's from a European perspective on fiscal policy. Let me see if I get you right. We have, particularly when you're inside the Eurozone, we have a number of countries with very, very high debt. And some of them also have sort of high structural unemployment, and they face a difficult task of striking the right balance between how to reduce this debt, but doing it in a manner that is not too much of a negative impact on growth. What we have been saying during these annual meetings, or spring meetings, is that given the strengths of the recovery right now, very robust recovery in Europe, and it is very robust, that some of these countries need to do better during the good times to build up buffers for the future.